this video, we are going to be looking at the dual key housing and see how good they are as an investment option when stacked against standard condo. Let's find out more. What's up everyone, welcome back to my channel, and today I really want to talk about dual key units. I mean, that's why I'm doing this video, and I don't see a lot of people covering on YouTube. But if you guys don't know what that is, put simply, it's like buying one unit but having two separate living spaces. So you have like two bathrooms, two kitchen, two toilets, two this, two that. It's like having twins. And that sounds really good because in one purchase, you're able to rent out two fully distinct spaces. But if it's so good, then why aren't more people doing it? Is it because people don't know about it? Is it because it's too expensive? Is it because it has a weird layout? That's what I really wanted to find out. To do this, I'll be comparing our contender, the dual key unit, to its more well-known condo counterpart, you know, your 2-bedders, your 3-bedders, you know, all that sort of stuff, to see which is actually a better and more effective investment option. To determine this, of course, I'll be comparing the averages of your purchase price, how much rent you get each month, and lastly, the capital appreciation at the end of the day. Alright, so let's go! By comparing between the different new launch developments in Singapore, I found that within the same development, the dual key unit comes in about $1,800 per square feet, and your condo comes in about $1,600. Or you can say that the dual key unit comes in at about 10% more expensive than a standard condo. And it really doesn't help that the dual key units tends to be much larger than its parallel, which pushes up its purchase price much higher and causes a much bigger disparity in terms of price. So already the dual key unit doesn't sound like a very attractive investment option, and that means that your monthly rental and your capital gain at the end of the day will have to work that much harder in order for you to make up for that price premium. But you know, the usual selling points for a dual key unit is actually its rental capabilities, so we'll see how that performs. Generally, on average, a 3-bedroom unit lets you cover 2.5% of its purchase price every year, and this is also known as your gross rental yield. While a dual key of the same size comes in at about 3.5%. This, by the way, is much higher than Singapore's average rental yield at about 2 to 3%. Now, everything I said so far is pretty hard to visualize, so here's a bit of an example to help you see better. If we have a 3-bedroom apartment at $1.5 million and a rental yield of 2.5%, its monthly rental comes in about $3,100. A dual key unit, which is 10% more expensive, comes in at $1.65 million, and a 3.5% rental yield will bring your total monthly rent to come in at about $4,700. This is assuming you rent out both spaces. Now, if we take the differences between all these numbers here, we see that the extra we pay for the dual key unit at about $150,000 is paying us $1,600 extra every month, letting us cover this premium in a bit less than 8 years, assuming rents don't increase. So if you're looking to hold your real estate for a long period of time, this seems like a feasible option so far. Just a disclaimer, I know I'm excluding a lot of variables like the time value of money, inflation, loan interest, taxes, but the main point of doing so is just for you to understand the gist of what's going on between the two different types of units. Now let's look at capital gain. Comparing over 39 developments with dual key, a regular condo outperforms a dual key 70% of the time, with the average appreciation for a normal condo coming in about 20% and a dual key unit at about 12%. Both of this over a 10-year period. Now we know appreciation is already caused by the jacked up prices developers have you pay up front. I mean, the price per square feet for a dual key unit is already so much higher than a normal unit, so it's kind of expected appreciation will be less. But the main question is the trade-off in gain actually worth it? If you use the same $1.5 million apartment and appreciate it over 20%, our gain would be $300,000. The dual key at 12% would gain us $200, both of course over a 10-year period. But if you remember, the dual key unit pays us a premium on our rents after year 8. It means in a 10-year time frame, we can count this 2 years of rental profit as capital gain, meaning that the dual key's return is actually 14% up from 12%. And in this scenario, it means your loss is $62,000 down from $100,000. If you hold on to the dual key unit for just a few more years, I'm quite sure that the dual key unit would outperform your standard condo just because of that sweet juicy cash flow. So I guess at the end of the day, it really depends what kind of investor you are. Dual key unit seems to be catered for lower risk appetite investors who have a preferences for high consistent cash flow. And your normal condo seems to be more beneficial for investors who like to take a higher risk, play the appreciation game, cash out and redeploy their earnings into another investment. And honestly, I'm a bit shocked at the results. I really didn't expect the dual key unit to perform as good as it did. And I actually think it's quite a worthy investment and it's something I might consider in the future. Anyways, I hope you all enjoyed the video, and if you're new here and want to see more interesting videos of real estate, do consider dropping a like and subscribe and maybe a comment on what you want to see next. Like dual keys maybe compared to Sell 152. And with that, I'll see you guys in the next video.